Unit 6, Finance, or as it's referred to by a number of students as sums. Those of you doing a level 6 module on finance will be happy as Larry because you know how to do it. Those of you who aren't may worry. Don't worry, Dougie will be holding sessions on how to actually put these financial instruments together, and on the website there are, accessible from here, pro forma Excel spreadsheets that you can fill in as the research and the products you're looking at. There are 4 elements you need to look at, and I won't talk much about them because obviously Dougie will talk about what is required. In order of perhaps importance is number 1, your cash flow analysis for 12 months, a minimum of 12 months. Some of you may want to do it longer to show that the business is actually going to be successful in the short term or medium term after the 12-month cutout. Cash flow month by month for 12 months minimum, showing capital introduced, and importantly, you need to actively manage your cash. So we need to see sensible deployment of capital. In other words, you may have 120,000 with it, between the pair of you, but what we don't want to see is £120,000 dumped in the bank, or in the business rather, day 1, and at the end of month 1 or month 2, you have 90,000 left. Invest the capital as it is required so you can show active cash management. So cash flow is basically everything about the money that's going to be in your business. It includes the introduced capital, your revenues, your costs, etc., etc., and tax. Do remember VAT and take note of what regime in terms of national insurance, income tax and or corporation tax you should be paying or declaring in the particular module. This tends to vary on a year-by-year basis in terms of, for example, in previous years, VAT needs to be considered because you can get VAT back, but often we have accepted your financial instruments before tax. Okay. Second one is your your profit and loss account. And again, that's essentially sales minus cost of sales, whatever. Do it, it's simple. Pay attention to what Dougie tells you. Thirdly, break even, which is again how long is it going to take you to break even. And the first one, which I've obviously got wrong initially at this stage, is there is a setup costs table required. So setup, cash flow, profit and loss, break even. Again, especially for the cash flow analysis, remember, those of you who looked at company reports will know that at the accounts at the back you have a number of footnotes to the accounts. What we like to see in your financial statements are numbered footnotes which explain clearly the assumptions of why, for example, there could well be seasonality in your sales forecasts, where there could be seasonality in the cost base, could be supply chain issues or whatever, where there is discounting going on which has an effect, or you're introducing or withdrawing capital. Whatever you are doing, whatever you're actively doing to manage cash, tell us, or tell them rather. You need to be clear. Again, it's a cliche, but I used to say it frequently. We can only mark what's on the page, not what's in your head. And again, it is very important, this section, because obviously it's a business plan. So go and see members of the module team to get advice. It's what they're there for, that's what they do. If you're confused, and often if you're not doing finance, it is or can be confusing, so ask. Okay? Thank you.